Roth IRAs are amazing, but TikTok doesn't think that's the case.
So someone asked me, what's the best kind of IRA? Roth, traditional? Okay, I have a different answer for you. Self-directed. Okay, Roth traditional, like pre-tax, post-tax. But what I want to talk to you about is the IRA doesn't have to go to Wall Street.
Oh man. The self-directed IRA pitch. I've seen this a lot on TikTok, and it is unbelievably scummy. A self-directed IRA is an IRA that typically comes with higher fees and lets you invest in some really speculative assets. You can even take an entire house, a rental property, and put it, a physical house, into an IRA. The result of self-directed IRAs is typically taking on a lot more risk beyond what the average investor should. This is also not good risk like, oh, it's really volatile. This is risk like, if you screw it up, all your retirement money is gone. The self-directed IRA pitch usually goes, get a self-directed IRA so you can do the really growth-oriented investments, but you quickly realize that you're in trouble because the risk of losing is so high. So why don't you pay me a ton of fees and I'll help you out with this. I'll sell you a course, or maybe you can invest through some kind of entity I've set up. And now I'm getting a ton of money to my pocket while you, the client, are getting screwed. The average investor, and by average investor, I mean 99.99% of investors, should stick with a Roth IRA or traditional IRA at a reliable brokerage and just buy up the market.
But by self-directing your IRA, you can do real estate, gold, silver, crypto, private lending, life settlement investing. All of this can happen in your IRA.
If you go to this guy's profile, you see that he runs a website that sells financial services. Is this a surprise? No.
The best investors I know don't invest into a 401k or a Roth IRA. Why is that? Number one, they limit the amount that you can invest.
You are correct that they limit the amount of money you can put to a Roth IRA or 401k because the tax benefits of putting money in there are so good, the government likes to cap it.
Number two, you have to keep it in there until you're old and retired.
If you don't want to starve in retirement and subsist off of Social Security, you were already going to set aside money for retirement. That time limit is not a big deal.
Number three, you can't borrow against it without paying penalties.
Leverage increases the risk of you botching your investing significantly. Do you want to gamble your retirement on leverage? You might retire really wealthy, or you might be begging on the street corner when you're 70.
There's very little tax benefits to investing into a IRA or a 401k.
Little tax benefits? Are you kidding me? What do you mean little tax benefits? A Roth IRA allows you to put money into it, and all of the growth comes out tax and penalty free later in life. We're talking decades upon decades of compounding growth where the government can't touch it. As for a pre-tax account, instead of paying 20% in income taxes now, you get to pay 12% later when you're retired, or 10%, or potentially none at all. It's incredible levels of savings. Do you know why rich people hire fancy CPAs? Because they don't want to give the government money. Why would we be downplaying the opportunities that average people get to not give the government money?
The absolute best people I know that are investing into real estate because one, you can leverage a certain amount of money and get 4 times the amount of asset to go and invest. Number two, when your asset grows, you can leverage that asset to go buy more assets through a HELOC or a 1031 exchange. Number three, there's massive tax benefits. And number four, it's paying cash flow now. It's building a retirement right now.
Whew, where do I want to begin? I don't hate real estate investing. I do hate these pitches though. Instead of trying to steer people towards the most effective ways of building wealth, a portfolio of low-cost index funds. But the idea that people, the average person, should take on a bunch of leverage and try to get into real estate is genuinely dangerous. Leverage can backfire in significant ways. When the market collapses and you can't fill your homes and you have all these mortgages you got to catch up with and keep up with, it can really backfire. For 99% of people in the United States, they should just take the way that reliably leads to becoming a multimillionaire. Get out of debt, have an emergency fund, and buy up tons of companies around the world via an index fund. And if you can put away 20 to 25% of your income and you just keep investing it, it's amazing what compound interest will do.
Yo guys, all right. Take out all your money from your savings account. Keep it liquid. Don't put too much money into your checkings account. If you have a 401k or a Roth IRA, take that money out. Look at this shit. It's happening again.
There are two parts to what he said, and they're both equally stupid. One encourages a bank run, and one encourages tons of taxes and penalties. Your money in your bank account is fine. there's FDIC insurance for up to $250,000 per bank. As for withdrawing all your money in an IRA and liquidating it, you can do that, but market timing has been proven to be disastrous because you have to market time twice to be successful, and most of the time you're not. You have to sell high and buy low. But if you're getting spooked by what you're seeing right now, it means you don't have a good risk tolerance. So you're likely gonna sell and then not buy back in until the market price is higher and things feel safer, meaning you're selling low, buying high. You should have a plan for what happens when the market goes up, when it goes sideways, and when it goes down. Those are the only 3 directions the market can go. You should just figure out your plan. For the record, mine is buy when it goes up, buy when it goes sideways, and then buy more when it goes down. Over the long term, today's high prices will be tomorrow's very low prices. If it goes sideways, it's another opportunity for the same thing. And if it's going down, I know that these lower prices will be tomorrow's high prices, and it's a sale, so might as well double down on my purchases. This is also why the rich get richer during recessions, because they have money to buy when everything's on sale, and the average worker who is not financially secure can't take advantage of the sale. This is why the best strategy for when you're nervous about the economy is get out of debt and get an emergency fund. So you too, just like rich people, can take advantage of the sale in the market. Like, subscribe, all of that. Thank you. Goodbye.